Hello guys, welcome to the pre-market analysis of 21st of April. It's been quite some time, but let's continue doing this. See, our market is clearly in an uptrend. That uptrend is still intact, but clearly missing the momentum, and the risk is very clearly building underneath also. So if you see, we have seen from all-time high, the market have fallen to 22,200 level. So from 26,400, 22,200, which is a 4,200 points dip, close to 20%. And then from 20 to 200, market have moved up, right, consistently because of the ceasefire and peace talks and everything, and came till 24,400, which is another 2,200 point. If you look at from the top to bottom, that dip and now the bounce, it's almost 50% retracement is already done. And we are now staying at a major resistance level, even if you look at Fibonacci retracement, even if you look at the technical levels, right? So 24,300 to 24,500 is a major resistance. There is a gap also, and this 500 level need to be closed for you to get a sustained up move further. Now the uncertainties are again building up, so the chances of getting that is very less, but still the uptrend is intact. The oil price is not spiking sharp despite these uncertainty, which is a positive. So the uptrend is there, lost the momentum, and the risk is again building up, right? And we are at a resistance level, we are at a Fibonacci retracement level. So here I never want to go aggressively long, even when I'm trading intraday. Whenever I get an opportunity to short, that's the ones which I try to capitalize. And today we need to look at what the news related to this peace talks and everything, and based on that we need to position ourselves. If there is something which is good, then we can get a good rally. The gap can be filled at 24,500, and we can get a sustained momentum also, and there can be a good short covering because it's an expiry day. Otherwise, I'm looking for a good opportunity on the downside. If it comes to something like 24,500, that could be a very good opportunity for you to short it if you find a weakness at the top. Now, let's look at the developments which we have seen over the weekend, and for those missing days, because I've not updated, few developments, right? So let's quickly do that. Weekend, what we have seen is US have seized an Iranian cargo ship. That means US is continuing the naval blockade. So what Iran is saying is this is against the ceasefire. What right you have to go with the naval blockade again when you are going with a ceasefire agreement? So Iran have told that we will not participate in the peace talks, and they consider this blockade, and told this blockade as a breach of ceasefire. So also they have closed Strait of Hormuz in return to that. So we have seen on Friday, Trump is coming and making an announcement that the Strait of Hormuz is open forever. And Iran also said that Strait of Hormuz is open, but within 1 or 2 days itself, that closed again. But good thing is that oil prices not spiking so sharp, though oil price have came down 10% when the Iran have announced that the Strait of Hormuz is open, and once it closed it increased marginally 7%, not more than 10%, not more than 100, which is again a positive sign. So uncertainty is increasing sharply. So remember, market is again in an uptrend. The peace talks and everything is still intact, it's going on, but uncertainty is building up, risk is building up underneath. Remember that always when you punch any trade on the upside. And if you look at the US market actually cooled off. Dow Jones closed flat to negative, slightly negative, S&P 0.24 negative, Nasdaq 0.3 negative. This is not that significant. And if you look at what is more important is S&P 500 have rallied 12% in the matter of just 3 weeks, last 3 weeks. So when you see such a kind of rally, which you are getting in a short span of time, and when the uncertainty is also there, what can happen normally? There will be a profit booking, and that's exactly what would have happened also. And even if you look at Indian market, from 20 to 200, we have almost rallied 10% in a matter of couple of weeks. So again, you reach to that technical resistance level, Fibonacci resistance level, and also the mindset, the psychology will tell you to book some profit. So profit booking is expected at these levels. Okay, and because of this itself, the volatility which have reduced slightly increased to 8%. So from 17.5 to 19, 17.5 was very good, very comfortable. Fear is completely lost because we have seen 25, 31 levels also. But still, it's 19 only, which is okay, comfortable. So the thing is that risk perception is rising again, and it is completely uncertain what Trump is going to do. So be very careful now, because we already have seen 22,200. Now we are at 24,400. So we got a 2,200 point rally also. So it's better that we take more caution, because if there is a downside possibility, still they can come till 22,200. We have seen that downside couple of weeks back. So that there is a possibility, if things are turning back, it can go back till then. Right? If things are positive, we don't have much upside also in a short span of time. Consolidation, then breakout, then come to all-time high, then go to 27,000, and probably, who knows, Nifty can go to 30,000 also if everything is cleared, because last couple of years, if you see, Nifty have given zero return, absolutely zero return. If you look at oil price movement also, I told you there was a spike of almost 7%, but then we have seen a correction of 2 to 3%, which is again very good. So when the Strait of Hormuz is closed, there was a dip of 10%. Then when it is open, right, there was a dip of 10%, which was very good. Then when Iran closed again, spike of 7%. Now there is a correction, which is also looking very good. So if you look at the current price, WTI is 86, which is very normal, very good. Brent is 94, below 100, very comfortable level as of now. So see, that's actually the biggest support for the market at this point of time. Now, keep a watch on oil price, and today is Nifty expiry also. So when you're trading Nifty expiry, keep a watch on the oil price, keep a watch on the world news, right? The geopolitical news, especially Iran US related, that will give you on what side you need to push for. So even if you're going upside, if you get breakouts or some trigger, see, you go with less quantity. If you go on the downside when you get a trigger, go aggressively. This is what I do. So either I sell call options aggressively, or I buy put options aggressively. When I say aggressive, means my selling account will have huge capital. So there, aggressive is one thing, and buying option, when I say aggressive, means maximum 2 lakhs only I'll use, and that will be done in the live market only. So if you look at futures as well, see, during Indian market close time, US futures were almost 0.8 to 1% down. Right. And we have seen towards the end, we also got a sharp dip, but then again recovered. Because of that itself, I'm looking for slight gap up, if not higher. GIFT Nifty is also around 23,400 level now. So we are looking for a small gap up of maybe 30 points, and then there can be a selling pressure which can continue. So overnight, if you see, the negative sentiment have reduced. During our market close, there were some negative sentiments, so we got a sharp sell-off also towards the end. So overnight, that have reduced. So I'm looking for a gap up of maybe 40 points, 50 points, like that. But will it sustain or not? That's different, because if you look at the ADRs, that's telling entirely different story. All major ADRs are closed negative, and that is more negative than the Indian market. So there is something which is happening underlying, right? HDFC have fallen 6%, ADR have fallen 3%, and if you see, uh, Friday, ADR was up 4%. So if you see the current move, we can consider it as an arbitrage correction also, but still there is a negative bias. Still there is an arbitrage difference which could be corrected, maybe in the Indian market or in the US market, it could be corrected. But ICICI, it looks very stable because of the strong results. And IT sector, if you see, showing weakness again, Infosys is -2, Wipro's -2. So clearly IT is looking slightly down. Banks mixed, right? So we don't know the reason. I'm not sure why this IT is like this. It's clearly not identified. Maybe US tech stocks, you can see some profit booking. For example, Accenture is almost fallen 1%. So, so it could be a positioning, and it could be profit booking, not a structural issue, because clear reason is not known. Any other news also related to IT, I don't know. So apart from that, yeah, rest of the things that we need to discuss, FII DII data, right? Almost 1,600 crore FII sold again yesterday. So in between, we have seen couple of buying sessions, but 300 crore, 400 crore, 500 crore, like that only. But when they are selling, we have seen in the month of March alone, they sold almost 1,25,000 crore. And in the month of April, in the first 15 days, almost 60,000 crore. But now again, when they're buying 500, 300, like that. But yesterday also, they sold significantly 1,600 crore, and DII is bought for 3,000 crores. So FII again turned net sellers after that 3 days of small marginal buying. That time the sentiment was changing, but still again they turned sellers. Whatever they bought, they sold again. So open interest, not much change. Today there will be a big change because of the expiry. So you can see one thing that PCR have improved from 1.07 to 1.11, which is again slightly bullish bias. If you look at the participant positioning, retailers increase their bullish stance from 10% to 12%. FIIs not much change. Prop traders not much change. It remained the same. So market is in uptrend. That is there, but the momentum is slowing down. Risk is building underlying. Positives are like oil prices below 100. Gift Nifty slightly positive, slightly positive. So we may get some 40-point gap up. Uptrend, that structure is intact. Trend line, it is staying above. Moving averages, it's still staying above. But if you get a trigger, that can give a massive downside movement. So the geopolitical risk is uncertainty is rising. ADR is showing some weakness. Core sectors are slowing down. VIX is slightly increasing. All these are the negatives, and risk is building under the surface. We don't know. So the trigger today will be HCL tech results that you need to keep a watch on, and US retail sales data is there night, but not going to affect the expiry today. Expiry today, the oil price and US Iran development. This is what you need to keep a close watch on. Apart from that, if you look at the option data, maximum call OI, I can see at 25,000 and then 24,500. If 24,500 is crossing, you will get a massive short covering. Put side, if you see 24,000, so that could be a bigger support in case if there is a dip. And if that level is breaking, then only you will get a further move on the downside. And after that, 23,800, 24,300 also there, that will be a straddle players. So the expected level is very clearly 24,000 to 24,500. So I repeat, market is still in an uptrend, but the risk is increasing. So I would say if you're going on the upside, caution is very much required, marginal quantity. If you're getting a trigger on the downside, heavy quantity and looking for a down move. So 24,500 breakout is required for us to get a sustained up move further. So I keep you updated if you would like to join us for the live market mentoring sessions. We trade in live market and we teach in the live market, and you can watch my trades and you can learn with the proper explanation. Get in touch with us. I see you there.